All right. Hello, everyone, and welcome to College Week. So glad all of you can join us for this workshop, A Budget Smart for College, presented by Ms. Stacey and Alita Smith from Excite Credit Union. Before getting started, we want to know who's in our audience. So in a second or so, you'll see a poll pop up. It is in 3 languages, English, Spanish, and Vietnamese, and we'd greatly appreciate you filling that out for just a second. Also, feel free to use the chat for any comments or questions about the presentation. Of course, we ask that you please be mindful and respectful in the chat and keep the conversation relevant to the topic. All right, thank you again for joining us, and let's get started. Ms. Stacy, if you would like to start us off.
Yes, thank you. Thank you, Christina, for that introduction. So hello, everybody. Thank you for joining us. Along with me is my colleague, Alita. She'll be helping me with the Fafsa and the credit. We have a really great workshop for you guys. So of course, let us know if you guys have any questions during the presentation. Feel free to put your questions in the chat, and Alita and I will definitely keep an eye on that. So let's go ahead and get started. These are some of the things we're going to be covering today. And you know, we made this presentation in the eyes of college students because Alita and I graduated. Alita, you want to say where you went to school?
Sure, yes. I went to, first I went to De Anza College and I transferred to UC San Diego. So I'm a first-gen college student and now I'm a first-gen graduate student. So we know very well what it's like to navigate that world for the first time.
Yes. So yeah, like Alita said, you know, this presentation we made specifically for first-gen or college students that are going to go, you know, soon. And we just wanted to give you an idea on what you will need to know to not maybe make the same mistakes we did, right? So I went to San Jose State University, and so yeah, hopefully this presentation will kind of give you an idea on what to expect and how to manage your money during your first, you know, not only your first year, but for the rest of your college years, and then of course post-college as well. So we're going to be covering, you know, budgeting during college. We want to know the importance of a budget, and then some of the challenges you might face while trying to stick to a budget. And then Alita's going to cover FAFSA, scholarships, and loans. Then we're going to actually teach you guys how to create a budget. And we have a really cool Excel sheet budget for you, all pre-calculated. That's really easy to use. And then Alita's going to cover what is credit, because we know credit is super important, and we don't want you guys to make, you know, really crazy credit mistakes that a lot of college kids do make. So let's go ahead and get started first with the credit union versus banks. So when we go out to the community, one of the first things that we want to explain is the difference between a credit union and a bank. And we are a credit union, so like banks, we offer financial services like checking accounts, credit cards, you know, loans, mortgages, etc. But unlike a bank, we are nonprofit, not-for-profit, meaning that after our operating expenses, our earnings are returned to members. And once you become a member, you're also part owner of the credit union. So that is the way that, because we make, you know, the money goes back to our members, meaning you. Instead, with banks, for example, the owners are the stakeholders. So when they make money, the earnings go to them. So one of the key things to remember is that credit unions are community banks, right? And the earnings are returned to members in form of lower loan rates, high interest on savings accounts, and lower no fees on our accounts. So remember that they are owned by our members. We keep money local and we reinvest it locally. And you can see in this picture too, we have a nice little picture that explains it as well. Okay, so now let's go ahead and start off with money management. And this is where we're going to talk about the importance of budgeting and why it's so important. And before I play this video, just wanted to say, you know, it's the easiest thing you can do is take care of your finances so you don't have to worry about it and be freaking out about your money when you should be focusing on school, right? And I know that from experience, you know, it kind of distracts you from school if you have these money issues going on. So we want to make sure that you stick to a budget. That way you don't have to worry about, am I going to pay rent? Am I going to be able to pay rent this month? Am I going to have enough money to buy food, etc.? Right? So this is why budgeting is so important, because it's a plan. You know, you already know how much money you're going to have coming in. You already know how much money you're going to be having going out, and it's just easier to keep track of. So let's listen to this video. I'm not going to play all of it, but here's the title, and it's on YouTube. So if you guys have time, you can definitely check this one out. I'm only going to play maybe like the first 2 minutes of it, and then, yeah, so let's go ahead and get started.
Go to the financial aid office, and they're the ones that can educate you, right? So be in their face. Your loan money is for school. When you get your loan check, they're going to give you a check. It might be $10,000, might be $15,000, right? And it's tempting to think that that money is yours. In college, you are broke. You don't have extra money. It may feel like extra money, but it's not. Because if you spend it on something other than your books or your tuition or your food and you run out, they're not going to be like, oh, here's a little bit more.
We learned about the different ways to pay for college, but what about having money to spend in general? You like to shop like I like to shop, or order pizza on those late study nights, or maybe you just want to go out and celebrate after a long week of classes. The next thing you know, your account is in the red and the overdraft fees have piled up. If you're like me and 43% of full-time undergrads, you'll have to work while going to school. And even if you don't need a part-time job, budgeting is crucial for making it through the semester without going broke. Let's dive into that right now. I'm Cece Allen from Now This, and you're watching A Student's Guide to Your First Year of College. Today's episode is all about how to make smart money moves during your freshman year. Emmanuel Moses from the Opportunity Network is back with tips to keep you and your bank account happy.
Direct costs and indirect costs. You know what that is? It is important for you to understand what you have to pay to the school and what you have to pay for yourself.
Okay, so we're gonna stop right there because I don't want you guys to, look at all these and want to see the whole video. So, but the main and we're gonna be going over like indirect and direct costs later in the presentation when I show you guys the budgeting sheet. But for now, I think one of the most important things that I think Michelle Obama said was, you think you have a lot of money because when you get your FAFSA financial aid check or you get direct deposit in your account, they give you a lump sum payment, right? So it might be very tempting to want to, go shopping with it or go on a vacation with it, but that money has to last you for the whole semester. And it depends on the semester. If you're going to UC, that might be quarter. If you're going to a semester, that's going to be like 4 months. So that money needs to stretch you for about 4 months. And then also want to take into account some emergencies that might happen along the way and all this stuff. So that is kind of like why we, college students, they get the check and then they think that it's just, it's free to spend and then they don't have anything for the next 2 months. So that's kind of what we wanted to give you a heads up on. But pretty much, is everyone okay with moving on? Does anyone have any questions before we go on to our next part, which is going to be financial aid? Let me check the chat. Let's see. Anything else you want to add, Alita? Maybe I missed something.
No.
No. Okay. Okay. Awesome. So let's go ahead and go to our next one, and I'm gonna hand it over to Alita. On this one, she's gonna be talking about financial aid and scholarships and loans. So go ahead, Alita.
Perfect. Thank you. So one of the biggest pieces of your budget is going to be financial aid. So if you can please progress to the next slide. Oh no, did she freeze?
Let me see.
Oh, okay.
No,
That's how
I
you
should be
froze.
here. Okay. Okay. You see the slide?
Yes, I see the slide now. Perfect. Okay.
Cool.
So one of the things that you want to make sure that you fill out is the FAFSA, the free application for federal student aid. This application comes out every October. So October 1st, it opens, and I would encourage you to fill it out as soon as it opens. It has a priority deadline of March 2nd. Now, I want to say you can submit the FAFSA after the March 2nd deadline. However, funds are always limited. So you want to make sure that you fill this form out as soon as possible so that way you can get all the money that you're eligible for. So if you're a current senior, you should be filling it out now. If you are in 11th grade, you would fill it out next October. And this form is basically letting your school know what grants you qualify for, if you qualify for work study, as well as what loans you're eligible for. So this is a really, really important piece to you attending college.
Okay.
Now, if you're unable to actually, fill out the FAFSA, your school or your campus will have a financial aid office, but I just want to add that, especially around this time where fall is getting ready to start, they're going to be jam-packed with questions and a lot of different things about financial aid. So the response time is probably going to be very slow. So what I would encourage you to look online, usually on the school website. I don't know if you want to pull it up, Daisy.
Yes,
for an
I have
example.
it right here.
Okay, so
So
this
this
is
is
just a,
San Jose State's website.
yes, so this is San Jose State's website for their financial aid. Typically, they'll have a lot of information on this page. So if you're unable to get a hold of the financial aid office right away, definitely make sure that you're doing your own research by going on to the financial aid webpage, because a lot of the times your questions could be answered just by going to this, this website. Every school should have something similar. They also have different workshops that they may be providing. And so this could be a really good resource for you to utilize. Thank you, Daisy.
So I'm gonna close that. Go to the next one.
All right. So if you're unable to, I also want to add, if you're unable to actually fill out the FAFSA, there is a DREAM Act application, and the deadline is the same. So it opens in October and it's going to close by the March 2nd deadline. So you want to make sure that you are, if you're unable to the FAFSA, you're a dreamer, do the DREAM Act as soon as you can, because again, it's going to let your school know what programs you're going to qualify, what grants you're going to qualify for, and if there's any university or private scholarships that you're eligible for. So make sure that you fill it out.
Oh, sorry. Let me actually go. My computer's a little glitchy. Let's go to loans first and all of the scholarships.
Okay. I see a question in the chat.
Oh, what is the difference between a 529 and a regular savings account?
Okay.
Okay.
So we'll answer that one, but before that, we also have another one. Can a FAFSA amount be affected by a student's savings account? Can a savings account negatively affect their FAFSA? So it depends on what kind of savings account you have. So there was mention of a 529 account. That is a federal account that is used specifically for education, right? And so with that, they will only take into consideration a certain fraction. So it shouldn't like wholeheartedly negatively affect your FAFSA. So it shouldn't really affect what your student is eligible for in a negative way. Can a savings account, what is the difference between a 529? Well, 529 and a regular savings account. So 529 is like it's a federal account, right? So you put the money in, a lot of times you'll get tax breaks, and this account is specifically for education. So if you try to take that money out and use it for other things, you will be assessed a penalty. And so in a traditional savings account, that's your account. You can do transactions, you can put money in, you can take money out. It's not federally monitored, so you could spend whatever you want from that account, but not for the 529.
Yeah, the 529 has to be, all the funds have to be used specifically for school. And if you don't, you get penalty and you get taxed. But for a savings account, there's no restriction. So if your child at the end does not want to go to college and maybe wants to get a car or maybe start their own business, right, that money can be used for that and there's no penalty. But if it's a 529, it has to be for college. And as far as should the account be in student's name or parent's name, I am not completely sure about that one. I think it's always best to put it in the child's name. But I don't know much more about whether, what's going to change if it's in either or.
Well,
Alita, do you know?
If it is in the student's name, it's not going to count. it shouldn't account negatively toward the parents. So when you fill out the FAFSA, you have to put your family's or your parents' income levels and your assets and so forth. And that's going to help determine the expected family contribution. So if the child, if you're going to do an account, I would say it's best to put it in the child's name. And that's just because it separates from your assets and the child's assets. So it's really going to depend upon you. Most accounts, savings accounts, especially for college, are in the child's name. So that's something that you would want to consider. IRA accounts. So if you are getting an educational IRA, it will affect FAFSA up until about 5%. So 5% will be accounted towards your FAFSA. So that's something to consider. And that's for the educational.
It also depends. And it also depends how much you have in the account. So if it's a minimal amount, it's probably not going to do much. But if it's a really big amount, then it might kind of offset the expected family contribution. So it can vary. But like Alita said, it's like 5% at most.
Yes. All right. Good questions. Okay, so one thing that I do want to talk about, especially because when you go to college, yes, you may get financial aid, but there's a possibility that it may not cover everything. And so this is when you would have to start looking at loans. And so you want to make sure that you understand the difference between the two, because they're not exactly specified all the time. You have to make sure that you are doing some research on there, because when the financial aid gives you your financial package, they just put everything on there. So there's two types of loans that you may be offered. One is a subsidized loan, and this is a loan that has a fixed interest rate, but the biggest part to this loan is that you do not pay the interest while you are in school. The government will cover your interest while you are enrolled. Now, if you drop below a certain amount, then you may be responsible for paying the money back, but traditionally you don't have to pay the interest. And then once you graduate, you're given a 6-month grace period before you have to start making payments. So this allows you some time to, potentially get that job that you want, and just to kind of get yourself settled. And then that is when you're going to have to start making those payments with interest. And then there is another loan. It's called an unsubsidized loan. It's very similar in that it also has a fixed interest rate, but the biggest part is that interest begins accumulating as soon as the loan is dispersed. So as soon as they put the money in your account, that money is collecting interest that you will have to pay back. So what I would recommend is that if you do have to get an unsubsidized loan, that you make interest payments at least while you're in school. That way, when you are done, you don't have, this huge extra balance added on to your loan, because they do give you that 6-month grace period as well. But remember, during those 6 months and while you were in school, it was collecting interest. So that can be a pretty significant amount added on to your loan. So when it comes to loans, if you have to get one, make sure that you utilize your subsidized loans first.
Okay, and which of these loans will have, I have some questions here. And which of these loans will have the best interest rate? Usually, the subsidized ones will have the best interest rate, because these are the subsidized ones, like Alita explained, they don't start interest until the student is done with school, while the unsubsidized start right away. As soon as you take out that loan, interest starts.
Yes, and then we have another one. Will the regular savings account be considered an asset and affect the potential amount a student can get? Now, if the savings account is, because the FAFSA will ask for your parents' information, their income, and I'm not sure, I haven't seen the application recently. I don't know if it asks for your assets, but it definitely asks for your parents' income. Now, if you do have to put your assets on the FAFSA, it could potentially affect you. And that's because you're letting them know what your assets are. But I can't remember if they actually ask you for it. So
It's been a while since I filled mine out.
Yeah.
But from what from yesterday, I know we had a similar question. It really does depend on how much you have, because there's a certain amount that is protected and they're not counted at all. So if it's a really huge amount, it probably will affect your FAFSA. But if it's a small amount, like, you know, somewhere between 2 and 5, it's not going to really do much. And one of the biggest portions that gets counted in the FAFSA is the parent's income.
Mm-hmm.
That is like one of the biggest things they look at. But to be completely honest, I'm not really sure like what's the amount. I just know it has to be a really large amount.
Yeah.
I can see if I can find any resource. I can see if I can find any resource and send it your way on the chat later before we end this call, to see if I can find an article that says more about that.
Yeah, and I also want to add, and when you're filling out the FAFSA, it's really going to depend upon your situation, because if you are in foster care or something like that, you do not have to answer anything about your parents. And so it's going to be a lot different, because you're going to be considered independent, and they're only going to go based on your income and your situation. So it's really going to vary. All right. So now I want to move on, and I want to make sure that I talk about the importance of applying for scholarships. Please, if you can, utilize scholarships, the most that you can, because it's free money. And you can basically, pretty much any and everyone, a lot of organizations are offering different types of scholarships, but I will say it does require you to do some research. It will most likely require you to write essays and, other things like that. But at the end of the day, it's worth it, because this is money that you don't have to pay back. So before you consider, getting a loan, make sure that you have filled out scholarships. And typically for scholarships, you want to start looking at least a year and a half in advance, because that's when they start coming out, where it's going to be applicable to you when you actually start going to college. So do it in advance, take some time, put it aside just specifically for scholarships. That would be my advice to you, because everyone is offering scholarships. You can go online. There's a lot of different websites that will give you information on the scholarships that are out there, and you may be surprised by how much money you can get.
Yes, always take advantage of these, because you don't have to pay them back. Good point.
All right. So like Daisy said earlier, when you are given financial aid, there's really two situations here, because you have students who will live on campus and you have students that will live off campus. So if you live on campus, you're going to a university, whatever the case may be, they are going to take, their cut right off the top before they give you anything. So you are going to actually receive a smaller lump sum than someone who lives off campus. And once you do that, you want to make sure that you're budgeting appropriately. Your room and board is already taken care of because you're on campus. They took that out right away. Your tuition and fees, they take away right away. You will have to account for your transportation, but hopefully because you're on campus, there wouldn't be too much of that. And also books and supplies, and this could really vary depending on what major you are. If you are in, computer science, you may have to spend money on a really good computer to do your homework, right? So that's something that you will have to consider. Now, if you are living off campus, you need to be even more careful, because you are responsible for paying your room and board, which is your rent. You're responsible for paying any utilities. You're responsible for your transportation, as well as your books and supplies. So you will receive a larger lump sum because you have more expenses that you have to pay out of pocket. So you want to make sure that you're being responsible with your money. I know it's tempting. I know you're like, oh, I got this money. Now I can go shopping, or I can, plan my spring break trip. But you want to make sure that you take care of your rent first and all your other necessities. Because remember, this money has to last you, depending on where you go to school, 3 to 4 months. So that's something to consider. We do have a question.
We have a question. If a student receives, oh, sorry, go ahead, sorry.
Oh, that's okay. If a student receives a scholarship, will that amount be deducted from their FAFSA amount? So you can access scholarships up until the amount of the actual cost of attendance. Now, some scholarships will say that, it's merit-based. You have to prove that there's a need, which means you may have to, also submit a FAFSA, and then show that you have, a need for more money. But typically, when it comes to school, you can only borrow up to the cost of attendance, which will vary depending on where you go to school. But scholarships can affect the amount that you receive from FAFSA. So let's say you get most of your money is actually coming from scholarships. That could affect the amount of FAFSA that you actually qualify for, because there's a cap.
Mm-hmm.
Yeah.
Thank you for that.
So that's something to consider also. But as long as the money's not coming out of your pocket, that's what really matters.
Mm-hmm.
All right.
Okay, so are we ready to move on? Does anyone have any more questions? Oh, I think we have one more that just came in. What if the scholarship is received after the FAFSA is filed? I think then that will be reported for the next one, right?
Well, if it will depend, because the FAFSA will say you received too much money and we want this back. So they would actually request that you pay them back.
That could happen as well.
Yeah, so if you get too much money, they will absolutely send you some notifications that you do need to pay them. So they definitely are on that. Yeah.
Great questions, Jenny. If you guys have no more questions, is there an income limit to qualify for scholarships? It depends on who's issuing the scholarship, and they'll usually say it like this scholarship is just for like soccer players, and then I'll list the requirements. And if there's no requirements, then any soccer player can apply. So really just depend on the scholarship, because a lot of different places post scholarships, like private companies, schools. So it really just depends on the scholarship, and they'll usually tell you there in the requirements when you're applying for it.
Yes, they should have all the requirements laid out for you to decide whether or not you actually qualify for the scholarship. All right.
Of course. Cool. So let's go on with our budgeting portion. And so one of the things that I know maybe some of us struggle is building a budget, especially because it sounds a little intimidating, right? But we do have a really cool Excel sheet here that we're going to show you guys, and you guys can keep. You'll just have to make a copy and rename it so that you guys can have your own copy. But we are going to talk about upfront expenses, and some of these might have changed, especially because of COVID. You might be able to save some money on some of these things. For example, some of the upfront expenses that a college student should expect are like, getting a laptop or traveling. You want to write that in your budget before anything. So if you are living in San Jose and you move to LA for school, that transportation is going to go up for you, because you're either going by car, you're either buying bus passes, or you're getting the plane, right? So this is obviously different now, because we're probably not going on campus, and you might be able to save some money on this, right? But that is an expense you do want to consider when you're going to college. If you're going to college in the same town that you live in, this transportation might go down for you. It might be cheaper for you. And then, of course, when we get our dorms and we get our new living situation, this also can change right now, of course, because it's distance learning right now. So we're probably not going to be going on campus anytime soon. So again, this number will also change, and this is considering all the dorm supplies, like, caddy, like little dorm supplies that add up, like when you're setting up your desk and all that.
Yeah.
Lamps or whatever. And then, of course, there's like backpacks and stuff like that. And of course, these are just examples. So if you can really get away with only spending $235 if you're a thrifty spender, and other supplies, if you stick to only the necessities, you'll $100. And then, of course, for laptops, as you can see here, you can get a decent laptop now for around $500. So it really just depends on what you're looking for, what are your needs. And then, of course, books. You don't want to forget about the books. That's another expense. And this expense can change from semester to semester. Just because you spent $500 on books one semester doesn't mean you're going to spend it again. It might happen. It might not. It really just depends on your professors. The professors I had in school were very mindful of student income. So they were really, they offered a lot of cheap books that we were able to get, you know, on Amazon Prime for like $5. So it really just depends on the professor of when it comes to book costs. But these are some of the expenses to expect when you're starting your first year of college and every beginning of the semester for the rest of the 4 or 5 years that you're there. Let's go on to the next one. So now I really want to get into budgeting. I want you guys to see what a budget should look like and where the money is coming from. So I have this link here, and I will share this link in the chat. When you press that link, it's going to take you to this sheet. And I'm going to put it in the chat now so you guys can open it. But let's see, where's the chat? I have like 40 windows open. Oh, here it is. Okay, here. So if you guys go to this link here, then you go down to File and Make Copy, and write your name in front of it and make your own copy so that this original one stays the way it is. So you guys can have this one. Just remember to make a copy of it, and that way I can keep this clean one. And so now I'm going to walk you guys through what a budget, and I know this looks really crazy, but I'll walk you through it. And this is all already, you know, all the formulas on it are in here already, so you don't have to do any math, which is probably my favorite part. So let's start with starting income. That is the income you're going to start with in the beginning of the semester, the beginning of the school year, or the beginning of the semester. And then here on the side, I have the description, so just in case you need more detail. But usually you get your Fafsa check, you know, around something like that. It really just depends. So this is just an estimate. And this is coming from, you know, Cal Grants, scholarship loans, your financial aid. And then, of course, you want to include any gifts you have, any money that you have saved up on the side. You want to include that in there. So that's what you're starting with. Then we spend money on our upfront expenses, like we talked about, laptop, all that stuff. So it's going to automatically subtract. So this is now what you have left. After that, because you remember, like I told you, you're going to get your check and you're not going to be able to know how to spend it. So the first thing you want to do is kind of divide that income that you have and divide it by either 4 months if you're going to a semester school, or 3 months if you're going to a quarter school. And you can do that here. So if you see right here, I have a 4 there, and I have a 4 there because I am, you know, going to San Jose State, and there's only 4 months in the semester. However, if you're going to UC Davis, then you want to put 3 there, because that you only have 3 months in a quarter. So it really just depends. So you can make this your own. So we know that for each month, we're going to have 750, right? And then you're going to put, if you are working, if you are not working, you don't have to fill this out. Your pay, how much you're making at your job, and that's going to add this up. So remember, this is going to be the income that you have after all those income expenses. Then you have that, and then it divides it by 4, so that each month you have that. So this is the income you'll have after it's divided by 4 or 3. And then after that, you add your check or whatever income you make if you're working. If you're not, then don't add anything there. And then you'll know how much your monthly income is. Once you know your monthly income, you can start adding expenses. So I pay for Netflix. I don't know, Netflix is like $12 now, right? Cell phone, transportation, and you don't have to put, if you don't have it on in your budget, you don't have to put anything there. This is just an example. If you join a fraternity or sorority and they have dues, if you can afford the dues, right, you need to check that first. Any of these stuff goes in here, and right here is going to tell you what your expenses is, and it's going to tell you how much you have left over. If you have money left over, you are good. That means you're doing good. If you have money in the negative because you dined out $100 one night, now you're in the negative, and now you have to go back to your budget and you have to adjust, because we do not want to be in the negative. I know I went over this really quickly, but if you go on here and you familiarize yourself with it, it could be a really good tool to keeping track of your money. Does anyone have any questions? Did I miss anything?
No, he didn't.
No?
You're good.
Okay. Okay. So yeah, if you guys, this is yours, and if you want to, just make a copy and put it under your own folder, and you should be able to have access to this whenever you guys want. But I'll close that for now. And that is kind of like a rough, like a, you know, a good template to have for a budget. If you're just starting out and you don't know, you know, how to budget, this could be a good way to start. And so let's move on to the next one. And if you, one of the other things that we wanted to talk about was about savings. And so when you're in school, savings might not be something on your to-do list, right? But it should be, because the emergencies always happen while you're in college, whether that's like, maybe you realize that, you know, maybe your car broke down, or you are doing, you're in your finals week and you don't want to work that last week of finals and you want to take that week to focus on your finals, then that means that you're going to have to, you know, cover that income for that week that you don't have any income. So if you need to have some kind of a budget so that you can build in your savings in there. And the rule to follow generally is 10% of what you make. So if you make $10, you put away $1, and that is a good rule to follow. But at the end of the day, you want to put in your savings as much as you can, and never compare yourself to another person that might be saving more. So maybe another person is saving $100 or $50. Don't let that, you know, get to you from saving those $5 a month. Because at the end of the day, that small savings account is going to continue to grow over time. And that's kind of the habit you want to get into anyways. For when you graduate and you get a job, you want to continue to save, right? Because you want to save either for a car, you want to save to just have emergency savings for a vacation. So just make sure that you get yourself in the habit of putting money away when you get paid, or when if you have leftover money and there's no need for you to spend it, then put it away in your savings instead of going and splurging, you know, on shopping or going on vacation when you don't need to, or, you know, so just get in the habit of saving money, and then that'll be easier when you get older.
Yeah. And I also want to add that, you know, when you get a bank account, you have a checking and a savings, right? And so I would also encourage you, if you can, to get 2 different saving accounts. One that you use along with your checking account. That savings account can be for your long and short term goals. You know, you wanted to save up for something. And then I would recommend having an account strictly for emergencies. And this is the money where you put it in there and you don't touch it at all. Your other savings account, that's the one that you can pull money in and out of. And this is just so that you're keeping your money separate and you're not mixing it up and taking from your emergency savings. So that can potentially help you just separate things.
Mm-hmm. That's a good tip for sure. Yeah, it could be easier to have one that's completely locked down. You know, you're just putting money in. Okay, so now and then finally for the students in the room, or if there's parents that want to tell your students, your kids this. So being a student is cool because you do get a lot of discounts, and these are some of the ones that we know of that we took advantage of while in school. So there's Amazon Prime, there's Adobe, and there's Spotify and Hulu, like premium for like $5. So all you need is your student email to take advantage of these. And there's also Student Pop. And on Student Pop, you can find a bunch of other student discounts that you can take advantage of. So I just put the link there in the chat. So feel free to check that out and take advantage of these. Because yeah, now I have to pay regular price for all of these, but it's nice to have that break while you're in school.
Yeah, for sure.
Okay, so now we're going to go into credit, and I'll hand it over to Alita.
Yes, thank you. So this is really important, especially when you're getting ready to go to college. You know, you're already having to deal with loans and other things like that. The last thing that you want to do is rack up a lot of credit card debt, but it's very easy to do. So first, let's just start with a simple definition. Credit is the ability to borrow money or access goods or services with the understanding that you'll pay later. And that pay later can also include paying with interest. So let's be mindful of that. If we can move forward. So I have a question for you all. If someone you did not know wanted to borrow money from you, first, would you allow them to borrow money? Second, if you do, what would you want to know about them before deciding to give them the money that they're asking for? You can just put it in the chat. You can say that you would give it to them or you wouldn't give it to them. I'll give you a moment to decide. Would anyone give money to a stranger? Yes, no, maybe.
Or if you wanted to let someone borrow money, what is something that you would look for? Like something that I know that this person is going to pay me back, so here's the money. Or I have faith that this person is going to pay. What is one thing that you can tell, right, from someone that you want to let?
We have one no.
Oh, I have one.
I would have to question why they're asking me out of all people for money and see if they have a history of paying people back, plus how much money would they be asking to borrow. Exactly.
Yeah.
So we can move forward. So that's the same way that lenders feel, especially when you don't have a credit history. You're considered a stranger. They don't know how responsible you are with paying your money back. And so that's the way they see you as well. So this is why they're extremely careful when giving away any type of credit lines. So first, who can apply for credit? So basically, to start credit, you need to have a social security number or an I-10 to be eligible to apply for credit. And what are some of the factors that lenders will take into consideration before they decide to give you anything? They're going to want to know your credit history. How responsible are you? They want to know your income. Do you even have the money to pay back? The number of inquiries that you have accrued on your report. They're going to look at your debt to income ratio. They want to know if you just like to spend a lot of money and not pay it back. And then your overall credit utilization. So those are some things that they will take into consideration. We can move forward.
Okay.
So it's important to know that, how do they even know this information, right? So lenders will report to what's known as credit bureaus. And a credit bureau is a data collection agency that gathers account information from various creditors that you may encounter during your lifetime. And there are 3 main credit bureaus: TransUnion, Experian, and Equifax. So all of them will compile data and give you a score. If we can move forward. All right. So So your credit score is made up of different things, but one is payment history. That makes up 35% of your score. And then you have overall credit utilization. This means, how much of your credit are you using? If you have a $3,000 limit, are you using all 3,000 or are you using maybe just a couple of hundred? That will make up 30% of the score. The length of your credit history, this is really considered the average age of all of your accounts. And then a credit mix. This means, do you have a car loan? Do you have a student loan? And then you also have credit cards, because that just indicates that you can take care of different types of credit. And then new credit, how often are you applying for a new credit card or a new loan? They take that into consideration as well. We can move forward. So the credit score range is 300, which is considered very low, to 850, which is considered perfect credit. And some of the positive things that can affect your score is paying your bills on time, low credit utilization, the credit mix that I've mentioned before, and keeping your accounts open, especially if they're older accounts. Some negative things that can impact your credit is missed and late payments, high credit utilization, too many inquiries especially within a short period of time, because that means their credit bureaus are kind of freaking out. They're trying to figure out why you're trying to apply for so much credit. And then also closing your older accounts can hurt you because you're bringing down the average age of your accounts. All right. So just a couple of terms that I want to introduce you to. So what happens when someone pulls your credit? So if a lender, someone that you are trying to get credit from or a loan from, is deciding whether or not to give you credit, they do a hard inquiry on your credit file. And so this hard inquiry will stay on your report for up to 2 years. So this is why you don't want too many of them, because then your lenders are going to start freaking out, and they're going to be like, it's kind of a bad idea to apply for too much credit, because then they think that you're high risk. And then it's also important to know that when you check your own credit, because some people do think that checking their own score can hurt their credit, and that's not true. That is a myth. Because when you check your own credit, it is considered a soft inquiry. And so this is when you check your credit. This is when a company is trying to pre-approve people because they get information from other sources, and you'll probably get something in the mail saying, congratulations, you've been pre-approved. That is a soft inquiry on your report, and it will not show up on your report at all, nor will it affect your credit score. We can move forward. If anyone has any questions, please use the chat. And so we're going to be talking about a few different types of credit, or you know, what are your options? It's important to know, especially if you're starting credit for the first time, which is typically when you're turned 18 and you're starting to navigate the college world as well. You want to make sure that you are being informed and knowledgeable about what your options are. Now, first, before I go into the options that you have, I want to encourage you to make sure that you are checking your credit on an annual basis. So at least once a year, you want to make sure that you are checking your credit. And this is just to make sure that nothing that doesn't apply to you is actually on your credit file. And so you can do that at annualcreditreport.com. And I would suggest that you check your credit before you apply for any type of credit. And that is just because if something is wrong, you want to make sure that you address that first. Then we're also going to talk about secured credit cards as well as student credit cards. So we can continue. And we put the link in the chat, and I would really suggest keeping this link, and when you have time, looking at your, pulling your credit files from each credit bureau. I just want to emphasize this as well. So we have 3 credit bureaus, and you will need to pull your report from all 3. So some people just check one, and so you want to make sure that you're checking all 3. And I'm not going to lie to you, it's going to take time, but it's worth it just for that peace of mind, knowing that, you know, nothing is wrong with your reports. So the first option that I want to go over with you is the secured credit card. And I start with this one, and this is because this is the less risky of all the others that are out there. And that is because you have to put forth what is called collateral. So collateral is something given as a security for repayment of a loan in case that you don't pay. So banks will allow you to open up a secured credit card because you're essentially using your own money. And if something does happen and you decide that you're just not going to pay it, they have money that they will be able to utilize in case you don't pay. And you can find secured credit cards at just about any financial institution. But remember, the minimum amount is typically like about $500 to open the line. And so they'll take this money from you, and it will be held for the life of the secured card. Now that could be a year, that could be a year and a half, depending on, you know, several different factors. So that's something to consider. And so whether you have a secured card, whether you have an unsecured card, you do not want to spend more than 30% of your actual credit limit. So in this case, you have a $500 limit. You don't want to spend more than $150 on that credit card. And this is just so that you remain in the low utilization range. And don't make it seem like you have to spend 30%, because you don't. You can absolutely spend less. That is okay. But you want to stay around the 30% range. we can move forward. Student, we also have the unsecured credit cards. Now these can be more dangerous, and banks are also more cautious to give these out, especially to people who don't have a credit history, because there's no collateral. If you decide not to pay, the bank takes a loss, and they don't want to lose any money. So again, you can find an unsecured credit card at all different types of institutions. They'll have a range of different credit cards that you can choose from, but you want to make sure that you're being careful with what you choose. My advice would be to stick to credit cards that do not have an annual fee. A lot of times credit issuers will, give you deals and different rewards points. So you want to just make sure that you're not getting stuck in a trap, because they will say, oh, for the first year, you don't have to pay anything. But then the next year they hit you with, a $100 annual fee that you weren't expecting. So just make sure that you're doing your research and you know what to expect, not just for 1 year, but for the future as well. And again, make sure that you stay under that 30% utilization. And be extra careful if you have a high limit, because then you just kind of spend and spend and spend, and you don't want to do that. Especially when you're in college, it's easy to spend. And then lastly, one of the options that you may have, especially as a student, is to get a student credit card. It still is an unsecured line. However, they take into account your student status. So they'll ask you different questions like, where do you go to school? Like what type of financial aid do you get, and those types of things. And you're more likely to get approved if you're a student. Now, there's still factors where you may not be approved, but that will depend on factors like your credit history, if you have any derogatory marks. They will still take that into consideration, but it's still a good option if you are a student. Just be mindful of your spending. All right. And we have one scenario. I don't know if we have time, but I'll just go over it really quick. So, you just got your new apartment. You also have a new credit card with a $4,000 limit. And before you know it, because you need furniture and all these other things, you've maxed out your credit card. And so what would this do? This will, of course, it will affect your credit score, because you've utilized your entire credit card. And two, you're probably going to have to carry a balance from month to month until you can get this paid down. So some advice, if this were to happen to you, is do not get stuck paying the minimum payment. If you get stuck paying, doing the minimum payment, you will end up paying on this credit card for years to come. So if you want to go to the next slide, I have an example here. So if you just paid the minimum balance on a $4,000 credit card, which can range from anywhere from like maybe $35 to $50 depending on the bank, you could be paying on this credit card for almost 30 years for $4,000 that you borrowed, and you will pay over $13,000 in interest. So make sure that if you are going to carry a balance, you pay as much as you can on that card and try to get that balance paid down and paid off. So that is pretty much the end of what I have for credit. So if you have any other questions, I think we have just a couple more minutes.
We do have a couple minutes. Let me see if I could pull up, before you guys head out, if I could pull up the packet really quick. Well, one of the biggest things that we want you guys to know, or, you guys are in that age where you're starting to open your accounts. And we have this chart for you. We made this chart a while ago. So just know that some of these things might have changed since then, if we made this in the summer. But we want you guys to be really informative consumers. So before you open a checking account, a savings account, look up the banks, look up what they're offering, look up credit unions, look up what they're offering, and make the best decision that's going to be, the cheapest, the best convenience, that's going to give you the best use of the account for not that much. So as you can see here, these are just examples, and this was made in the summer again. So we have Bank of America here to open 18 and up. Opening deposit $100. The minimum balance is $1,500. Now this could have changed, but the minimum balance is what is required to be on the account. And for a college student, that is a really high number. The monthly fee will be $12, and then monthly fee, so this $250 direct deposit or daily balance, $1,000 a daily balance to enroll. So see, and you could see here, and what you can do is look up 3 banks that you're thinking of opening an account with, or 3 credit unions that you're thinking of opening an account with, and do your research on each and see what's going to be the best for you. So remember to look at the fees, remember to look at the minimum balances, the opening deposit can make a big difference, and of course the access to these things, like how easy is it going to be for me to access my money. So just be an informed consumer and do some kind of research before you open a checking and savings account.
Yes.
But I think that's it. So
Yeah.
if you guys have any questions, we do have our emails here. So if you guys have any questions and maybe you want to ask us, and it's more of a personal question, you can email us. Alita and I are both here. And of course, I know that Christina just sent the college survey, so make sure to also fill that out. Help us get some feedback. But that's pretty much it on our side. Thank you guys for taking your time and being here. And I'll hand it over to Christina.
Wonderful. Thank you so much, Daisy and Alita, for this wonderful presentation. Very informative, a lot of info. Again, we do have a couple minutes for any burning questions. Please do feel free to put in the chat or the Q&A. We have time for maybe 2 more. Otherwise, if nothing comes through, this does conclude our presentation for today. And again, as mentioned, we do have the survey links in the chat. We really do appreciate your feedback, and we'd love to hear from you. The Survey Monkey does pertain directly to this workshop, so you can open that up and complete it at some point today. We also put in the link for our College Week website, where we have more workshops. Tomorrow is officially College Day and the last day of the workshops. So do feel free to check out some other workshops that we have going on pertaining to financial aid and budgeting for college, and in general, how to prepare for college for our students. And I do believe we have a question, if we can get the budget link to the sheet.
Yes, I just passed it. It's right there. It's the one that says Google Spreadsheets. So you guys can click on that and make a copy and put your name in front of it. That way you could have your own one.
Are there general qualifications for student loan applications? Yes, it will depend upon the loan that you are trying to actually apply for. They will tell you what requirements are necessary to apply. Some loans will require a credit check, some do not. So that's also something to consider. But when you go to apply for a loan, they should lay out all of the qualifications and all the requirements for you. Make sure that you read all the information. I would encourage you to take some time with it, because a lot of people just kind of glance at it a little bit, and then they start signing stuff. So be careful with that.
I just posted it. I had sent it to all panelists, so I couldn't see, but now I posted it to attendees. I'm sorry about that. It should be there now. The link. Got it. Okay, great. I think, was I doing that throughout the whole thing then? Was I just sending stuff for all panelists? I hope not.
I think so, yeah.
Oh no. Okay. Let me do some quick. Okay, cool. Well, at least I got the sheet now, so.
Yeah.
Okay. And if anybody has any questions, is there any contacts that they can reach either 2 of you or someone in general at Xsite?
Yes, so I have my screen here. I'll share my screen. So these are our emails. If you guys want to reach out to us to ask us more questions about either, checking accounts, savings accounts, more questions about budgeting, these are Alita and I emails are here. So feel free to contact us, and we're pretty good at responding pretty fast. So let us know.
Yes, they are indeed. All right. Well, I don't see any more questions coming through. So once again, thank you so much, Daisy and Alita, for your time in the presentation. Thank you so much, attendees, for being so engaging and asking great questions. Again, this has been recorded and it will be available on our website and on our YouTube channel fairly quickly. So once again, thank you so much. I hope you all have a great day and happy College Week.
Bye.
Thank you. Happy College Week.